Hello, Culture Matters podcast. Before I introduce our guest, here's a quote just for this episode. An investment in knowledge pays the best interest. Benjamin Franklin. Today, I'm welcomed by my co-host of the Value Investor series, the one and only Aleck of Arena Securities. If you haven't listened to episodes 221, 470, 513, 864, and 899. Go take a listen to those episodes after our episode today. Alex started reading and studying investing around 10 or 11 years old. He's far beyond his years as it relates to investing, business, the world, thinking through problems. He advises and is a positive feedback loop to many amazing investors worldwide. I consider him an advisor and someone to talk to and talk through problems myself. And we've built a great show interviewing, amazing people like Christopher Davis, Steve Baxter, uh, Luke Winchester, Jordan Svetanovsky, and so many more world-renowned value investors. So today we're going to talk a little bit about value investing, its history, some updates from Arena Securities, and this quote. Aleck, thanks for coming back to the show at 5 a.m.
We never sleep. It's 5:40 in the afternoon here in Australia, so yeah, I'm definitely awake. Maybe Jay never sleeps, but yeah, I shouldn't be sleeping right now. Thanks for having me on, Jay. I don't think the guests that we've had on are always coming to me for advice, mate. It's mainly me going to them every time. But yeah, now that we've got that out of the way, I'm ready to get stuck into it. Haven't formally prepared much for this episode, so just yeah, kind of just coming at it with what I'm thinking at the moment and time stamping this. It's the 21st of July, 2025. And yeah, I'm excited to get into it. I
I'd
you
like
talked
to.
about you talked about updates for Arena Securities. I don't have too much to be honest. Maybe the market in general's a bit on the toppy side. I would say now we had a trade war, or we had a Libertarian Day, which was a very interesting day in markets, where markets fell insanely over the 2, 3, 4 weeks. Um, Lots of retail investors
Uh,
were trying to get out of the market. People were really, really scared. And since then, we've had a back step kind of taken by the US federal government and I'd say a more dovish approach to to a global macro effectively trying just trying to speak to the average person. Um, you and Bill Murphy have already touched on tariffs on this podcast before, so I won't delve too deep into that. But effectively, America, there was trade imbalances between America and certain other countries, and they're I don't know if it's so hard because I'm speaking in politics now. I'm definitely in a gray. It's I don't want to upset listeners, and then I'm trying to still be informed, but also explain it to just the average person on the street. But effectively, to do it quite simply, the uh, big hitters in the US kind of got a bit tired of a trade imbalance, and they went to war, not with guns, but they went to war with their voice and with their pens and with their paper. And um, this outcome that they chose was that the US consumer would have to pay more at the checkout for certain goods and services because they were taxing imports more to fix the trade imbalance, to try to promote people in the US economy, to try to promote um, consumers in the US economy to trade with each other more and to not use globalization. And globalization is when you can produce goods or services in a different country for cheaper than you can in the United States of America. It's a concept that all Western countries use and exploit. So we get in Australia too. We get our most of our goods manufactured in China, just like you guys do, and it becomes a we become heavily reliant on China and a few other countries, but mainly on China. And I don't mind the Chinese. I don't want to say anything that will offend anyone. But yeah, the Chinese are fine to me. We have a massive trade imbalance ourselves. And um, is this okay? Yes and no. At the end of the day, it's best economically. But if China was to ever turn around and stop producing our goods, we would go to different countries, probably like Malaysia and Indonesia and parts of Africa to get our goods manufactured. Um, at China, the problem was, and the problem is that China was more than 50% of the Western countries, really, Australia and Americas. They was like we did so much trade and we were so reliant on them that if they were ever to click their fingers, it would have an effect and there would be a teething period. So I didn't really explain that well a minute ago, but there would be a teething period where you couldn't just jump across to um, like Malaysia and Indonesia wouldn't have the manufacturing capacity straight away. So there would be a big teething period and a kind of a big spike in inflation. People were scared because we trade with China lots, but we don't really get along with them too well. At the end of the day, it's a communist party. If I don't, I think if it wasn't a communist party, they wouldn't have done as good as they have in the last 100 years economically. Chris Davis touched on that very quickly. And then we also had Steve Baxter on in the meantime, and it was if Australia or the US was ever to go to war with China, we would stop importing stuff to China, and pretty much the whole country would starve to death within 30 days. So that's our kind of switch and our lever that we have to pull. A lot of people think it's extreme and it's nuclear warfare and it's trench warfare, but we're long past that. And at the end of the day, we have a sour relationship with one of our biggest trading partners. And they have a lever to pull, and we also have a lever to pull. And then it I think it's time for the US entrepreneur to sit at their table and think if there's any way that they could kind of cut China out in the supply chain. I'm not trying to create enemies there, but there might be certain things that they can manufacture in the US cheaper than China. And then you're cutting out a logistics chain there too, because obviously you have to get the goods to China and you have to bring them back. In Australia, we we're really big into mining, and the last really since the mining boom started, which I would say is way beyond the modern day mining boom. I would say it's in the 70s and before that. When the mining boom started, straight away we started exporting. I would say like 10 years later, we started exporting all of our materials to third world countries, which predominantly became China, because they would refine the product and then we would pay a margin and get it sent back to us. So we would send iron ore over to them, and then they would obviously manufacture it properly and turn it into steel. That's really simple, and I've missed out multiple steps there, but we don't need to understand what the listener doesn't need to understand what happens in the middle. So yeah, we pay this big margin to get it back as steel effectively. And they haven't found the raw material whatsoever, but then they've collected a big chunk of the profit And a reason would be is because they don't have to pay their workers as much, effectively, because it's third world labor, and they're very efficient. And they built all the manufacturing facilities to produce steel, and they're still there. So they're still one of the lowest cost producers of steel. Um, this kind of rubs people in Australia and America the wrong way. America's got different examples with stuff they send over to China. And I don't think it's for good reason in Australia, if I'm being honest. But my point was that I've gone off on a tangent here is that for many, 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 many years, people in Australia thought that that was the only way to do it. And then some entrepreneurial people came like burst onto the scene, and they thought, well, maybe we could do crushing in Australia, and then it's a lighter weight material when we send it over to China, or maybe we could do some of the processing in Australia, and the Chinese can do the parts that we don't have the IP currently to do. So with technology over the years, it's made it possible for us to do some of the processing in Australia, not all of it, but there's about maybe 10 to 15% of the value chain that we can now capture that we don't need to go through China with. And what I was trying to say is that maybe it's time for some US entrepreneurs to just look at the pipeline and look at how they're doing things and go, can we save any money here? For most of them, 90%, I think the answer would be no. Third world labor and the manufacturing chains that they have is just too far, like too good to compete with. For 10% of them, there might be stuff that they can actually save money on and get manufactured in the US, which is much better for America, which is much better for your country as a whole, because then someone makes money, they pay taxes to your government, and then your government spends that money and they spend that money to employ a person in a government department, and then they pay taxes, they buy a home, they buy
Mm.
groceries, the farmer pays. You understand what the chain is, Jay, and I'm really just speaking to
This
myself
is
here.
very helpful. Well, would you say that in a simple way, you said the left uh, takes full advantage or has taken advantage, leveraged global globalization in the sense of outsourcing things to the rest of the world. So is that a benefit in the short term in a sense, but in the long term that can take a toll on or have a cost to the actual Western country if right if so there's
I just,
value in looking
yeah, I
home,
agree. I agree and
but it's
disagree. I think
probably not a either or.
there's definitely value in. I think every 10 to 15 years, there's value to actually looking at the process and seeing if you can cut costs somewhere and what you can produce in your actual own countries. Because when technology advances, you can actually cut costs sometimes that aren't available now but are available in 10 years' time. And it's a good opportunity right now for the American entrepreneur to go, what was they doing 10 years ago? What was they doing in 2015? It's 2025, technology's changed. Probably not for all industries, but there'd be some industries where they wouldn't have actually realized and they would just keep doing the process. Effectively, the process is just like a person working a 9 to 5, waking up in the morning. They just keep doing the process and they don't check. And I think this is kind of, in a roundabout way, giving them a good opportunity to check. Um, in 4 years, when the next election rolls around, are the Republicans going to still be in power? I don't know. They might go back to their old ways and they might take tariffs away. I think they will. I don't think tariffs will stay. But I was just trying to highlight that there is some opportunity there, and people on the right are also exploiting it. I heard you say to the left, and I think it's much bigger than politics. At the end of the day, in my belief, globalization is a huge benefit to the Western world, and it's been a huge tailwind for the Western world's GDP. So, like the average day person, because of globalization, has actually gotten richer, not poorer. Manufacturing cars in America is not a smart idea. Well, for the most part, it's not a smart idea. Maybe there's a few things you guys can do, but if you're it's not going to work for you. You guys have to pay your workers so much more. There's a minimum wage. It's not going to work in Australia either. I'm not trying to take shots at America. I'm just trying to explain it to the older generation and the listeners. Like we used to manufacture Ford and Holden cars,
Mm,
and that's not an industry we do in Australia anymore. We sell more high margin things like software to different countries, and we sell commodities because we've got a competitive advantage with commodities because they're in our backyard. It's quite a simple process to take them out of the ground. You guys mainly sell high margin things like IP, like the IP in your heads and software.
mm,
Over time, Western economies change and they become more of a service based economy. And the manufacturing is done in the Western countries. And yeah, effectively, we call that globalization. So the manufacturing is done in the more third world countries, and we do call that globalization. That doesn't mean they have to be Eastern countries. It's not,
mm,
there's not one great divide because I don't see them manufacturing a lot in Saudi Arabia or countries like that. They're sticking to their competitive advantage and they're pulling oil out the ground. They're not. You go to Doha, like you go to Qatar, they're not manufacturing a lot there. They're selling products that have been imported from China and South Africa and like countries that have been exploited for their labor. India, they're selling products from those countries, but they're not manufacturing stuff in Qatar. They are not manufacturing stuff in Singapore. 50, 60, 70 years ago, they were manufacturing stuff in Singapore. Then the Singaporeans moved up the value chain. 70, 80 years ago, they were manufacturing stuff in America too. And then you guys, because you're pretty smart people for the whole, someone's done something right in that country, right? Because you've moved on from manufacturing and now you're bigger and better. Well, you're bigger and better than that. Your GDP is going up heaps.
mm.
And the average person that goes to work for wages is richer today than they
Wow, this
were
is
80, 90 years ago.
well, but
Um,
this is so fascinating because it's like a business that becomes very top heavy, high in management, a lot of management. You could have a great board, a great C-suite, uh, but if you miss if the bottom is weak, the core values start at the bottom and they go up. Like I mean, you need a strong base for the
you do,
values or else it creates like it's like the added shirt sleeves of shirt sleeves or rice patty to rice patty, but from a
yeah.
country perspective. Oh, if you could expand on that. I know you have
Look,
some insights into that.
no, it's all good. I think that the best way to explain it literally is like, I'm a big fan of the Singaporeans. It's not just because like, it's not, it's, I'm a big fan of how they've done stuff economically in the last 70, 80 years. They are one of the smallest countries. Like they wouldn't, Australia's millions of times bigger than them. But what they've done economically is extremely smart. And what I'm saying, effectively explained short, like a lot quicker than I could explain it, is just if the listener's interested, I would just go read up about Singapore and what they've done economically for 15 to 20 minutes. And if you're more interested than that, take a deeper look at it. And like that's how an economy comes out of being a manufacturing based economy and turns into a services based economy. And now they sell stuff more like tourism and luxury goods and apartments, and people want to come to
Mm.
Singapore. Singapore, I sorry, I could talk about Singapore for 5 years nearly. I think it's an amazing place. It's so clean, but the thing with Singapore too, and the podcast is called Culture. It's called the Culture Matters podcast. Their value system was created, and they've stuck to it. So even though they've got richer, the majority in the middle class still live out those same values. And people
Mm.
would say they're poor because they live on 99-year leases and they don't own their property that they live in, and that's an un-American thing. And people would say it's un-Australian too, but they effectively own their own places, and the cost of living is a lot lower because they rent them out to the government. So they rent them out from the government for 99 years. do they have a big backyard like Australia and like America does? Like I'm saying, a house, does a house have a big backyard? No, they don't. But the country is the size of a pin on a map. Generally, you'd miss it. You'd think it's a part of Malaysia. And all Singaporeans would kill me for saying that, but I'm just saying if you zoom out on a map, it's very small.
It's saying that it got its independence in 65, parliamentary republic, strong central government, no natural resources. Success is built on human capital, innovation, trade, rank consistently one of the most business friendly and economically free nations. Major industries like finance, logistics, tech, oil refining, and biomedical sciences. One of the world's richest countries per capita. So the cultural and demographic diversity, 75% Chinese, 15% Malay, 7% Indian, others, English, Mandarin, Malay, and Tamil. Famous for social harmony, despite ethnic and religious diversity. Education, world-class education system, consistently top global rankings in math, science, literacy, strong focus on bilingualism, STEM, and global competitiveness.
There's something in
Uh,
that too, isn't there?
oh, this is well, cult. Yeah, because if you
Education.
think about it, well, bilingualism, so these people can connect with a diverse foray of other cultures that, for whatever reason, go there. So they're attracting capital from other cultures to them by being open to trade, by making it
They're nearly
advantageous for others. So they're like sucking resources from
in.
other to it in and what they're
That country's
it's very
it's so
fascinating.
small, and it's a main trading hub of Asia. It's so small. So that's sucking capital away from Australia, and that's sucking capital away from China, which are really big players in Asia. If you would
Extremely low
include,
crime rates, known for strict laws banning on chewing gum sales,
you're not allowed to
harsh
spit chewing gum on
penalties.
the street. You get like arrested for it, but there's fines for all that. But
Wow.
now you can go
Littering.
Google what Japan's done over the last 30 years in a GDP sense, and they've kind of, for a long time there in the 70s, I would say in the last 50 years, Japan's a interesting economic, um, it's an interesting economic case to look at because they were like China, they were like China is to America now. That's where most of your manufacturing was done. And they became more than 50% of the manufacturing like China is now. And they didn't want to let that go.
Hmm.
America as a country kind of crushed them. They took a bit of inflation, but they were like, why do you want to manufacture so much? Why? Like you need to go and become services-based economy now. You need to move on from being a manufacturing superpower. And
Hmm.
then they kind of moved on, but they had a massive asset bubble in the 90s and then it blew up. And then there was this massive deleveraging event which pretty much has gone on for 20 to 30 years. And their stock market's pretty much just back at all time highs now that it was back 30 years ago. The real estate market completely fell off a cliff, but they kind of, they were like a dog with a bone. They wouldn't stop being an economy that relied on manufacturing. And then after 10 years, they realized that shit, we actually need to change. And then they tried to become like they really fed into becoming uh, a finance hub of Asia, but they were pushing their people into markets and pushing their people into real estate. And there's so many people in Japan, the real estate prices are going up and up and up, and people just leveraging more and more and more to buy these houses, and it just made this massive bubble. And the asset prices, like you could see them rising on a graph, it's insane. And effectively, the government accidentally created a bubble, which then burst, which has then made the Japanese mentally, it's made the Japanese think very unlike the Chinese. The Chinese love leverage. So they'll buy properties and they'll leverage and they love it and it kind of gets them excited. And the Japanese, when they see leverage now, they want to run so far. And effectively, that's why the Japanese property prices have stayed still for 30 years or just slightly gone up. And there's been inflation in the meantime as well. Obviously, there's certain areas that were outperformed, but I'm just looking at it as a macro. But I didn't think
I'd
when I was
like to
getting on this
ask you
podcast
about,
today. Sorry, mate.
ah, no, what'd you not think? Yeah.
I was going to say I didn't think when I was getting onto this podcast today it was going to be Alec Arena does a special on Asian countries.
I'm so happy that we've gone here. I have a question about, so how about this metaphor? A country that moves from manufacturing to, uh, let's say the financial construct. A
Yep.
person moves from the labor class to the investor class. There are pros and there are cons on both sides.
Thank God for you, mate. Thank God for you. It's probably a tiny bit like usually a person becomes less reliant on their labor and more reliant on their assets when they get closer to retirement. It's like an 80-year-old still trying to rely on their labor. It's not going to work very well. The candle's pretty burnt out. And with a country like that where the population is so dense, you can't you start what are you going to do? You're going to build more infrastructure. You can only go up, and then I suppose gravity pulls you back down at a certain height. So they just can't roll out, and like even in Singapore, it's not what I was trying to explain there, but they've actually imported sand and made more land. But yeah, you can't just keep on building, and effectively you need to be you need to watch what you're doing with your decisions. You need to be more conscious and you need to make more of the right decisions. Maybe when you're a 20-year-old and you spend $1,000 at the pub on a Friday night and you're earning $52,000 a year, it's not going to hurt you that much. But then when you're an 80-year-old and you're spending $500 on a random dinner and you've just got the average assets that another 80-year-old has, like probably like four, $500,000 in assets, that's going to hurt you a lot more. You have to be tighter with your money. You have to try to make it last, and I'm completely wrong there because I've just told everyone what the average 80-year-old should have in assets, and that was definitely that was not a that was not a statement, and that's not what the average 80-year-old has, and I don't think that for a second, but I was just trying to explain purely that for an 18, 20-year-old kid to go out and be stupid, it's not going to hurt him as much as it is for an 80-year-old that's relying on that money for retirement.
Well, I want to, there's a something that is bubbling up here around values. So you mentioned, that's I want to explore that for a second. The idea you're saying the let's say someone is much older. It hopefully they're at a place where their assets are performing for them akin to or beyond due to compounding. Our quote from the beginning, the power of compound interest. It was about learning, but we know compound interest also means the exponential J curve of like capital and
Yeah, there was
learning everything. So like let's say at some points much older, we hope that their assets perform for them akin to or better than in their youth their labor did, their time did, the trade of time for reward. But I want to stress something or a thought, your opinion on this. Let's say we have the assets and we have the capital. Uh, there's almost there's a negation of values creation, but there's a transference of values because the idea is that the capital class is transferring wisdom, let's experience. Just even look at this conversation. It's a global conversation. It comes as a consequence of you, for example, studying 24/7, talking to people all over the world, reading different things to get a global picture to understand a broad, that's part of the role that's part of the 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 value system of what it takes to be an effective investor, to be an effective feedback loop for the entrepreneur, for the management running the businesses. it works in a beautiful cohesion where the investor knows enough to make that prudent investment to be valuable as a feedback loop for its investees. It also, so like there's value created for the investees. It also keeps the investor out of business and making money and very competent what they do. But there's a wisdom exchange there. But values start at the bottom. Values start from the process of labor, from the process of self-sacrifice, from the process of, and that's not to say that investors aren't laboring. There's a different type of what sacrifice but I don't know if you could help me kind of explore this thought here. It's like if the whole country moves to the assets, and it's not, think about this, right? The retiree that has to rely on its assets, keep pay, what uh replacing its labor. Well, it's about to die. The person's about to die. Like they're gonna die. So so
Yeah.
so is that a metaphorical foreshadow to the
Oh, not
country's
always, but
gonna
usually the
die?
person's about to die. Sorry, I've just said there's
Yeah, well,
people
the
I know that
person
would have.
dies, right? So the person dies, the culture dies, the country dies. The country is gonna
Yep.
have to be reborn. If a country uh moves away from labor, from like that process of values cultivation, values curation, and it's just capital, it's just capital allocation.
Yep.
It or like what does that foreshadow? Is it in retirement? Is it
Well,
debt? Is it dying? And this is not like a clear cut more of
no,
a,
it's
what do
it's
you
it's the countries that are relying on finance more than labor are not dying. But if the usually they have to make very good decisions, and usually politicians can't. It's not even the politicians' fault at the end of the day, because you've got too much indecision between the voters, which then funnels into the politicians, which are then effectively at the end of the day, everyone's selfish, and the politicians are just there to get paid. So they just want to stay stuff so they keep getting hired. So then that doesn't show any long-term planning for the country, and the country kind of it doesn't die but decays. Um, it's weird. It's a country can't die or
No, yeah, that's a
you
really
get
good
what I
point you're
mean,
bringing
Jay?
up
The
because, okay,
country, the name's still on the badge, but it's rotting. The
but that's
flag
a really
looks
good point.
okay, but from the inside, it's actually rotting. Yeah.
That's a really
Um,
good point about the amount of pressure that a political leader would be under. It'd be like a CEO. If a CEO has to
Much worse
report
than
to
a CEO.
shareholder, well, oh,
They've
sure, but I'm
only,
just use the example to like make it practical for the if you could elucidate on this. If a CEO has a vision of, okay, I have to report to shareholders every quarter, they might vote me
yep,
out. But
yep.
but we have to make some tough decisions for 10 years, for 3 years from now. How do I convince my shareholders to do that? I have to be some kind of unbelievable influencer to be able to actually convince people.
Yeah,
How
you
do I
have to
do
sell a
that?
vision.
How?
Well,
What have you
it's so
seen
hard
from the most
because,
effective public CEOs when you're buying these into these public companies and we're studying?
well,
We can end on that.
usually to have trust in a CEO, they have to have results on the wall. Um, Once they've got trust from the market or group of, because they'll gain trust from the market, then they'll gain a group of shareholders that will trust the management team, and then you have to rely on them to execute. And a good management team will execute a fair portion of the time, but they'll stuff up and have teething problems because businesses are effectively a bunch of people that turn up at a door that has a label on it every day, and that's the business. In Australia, they have an ABN, they have a business number. That costs about $800. So, so businesses are made by people, and they're made by the management teams and their ability to kind of effectively relate with the workers, incentivize the workers, deliver a product or service to the consumers. And sometimes the management team becomes dislocated from their employees. Sometimes it's a tough macro for them. Sometimes it's a cost there that they thought wasn't going to be there. So they have to use extra capital from a debt facility they have. Businesses are very complicated things. But yeah, effectively, I'm not fully answering your question. You asked me, how does a CEO sell a long-term vision? Well, they have to have runs on the board, and then they have to speak effectively with clarity, not to be overconfident, just to speak clarity on the long term, have somewhat of a vision when an investor speaks to them, or have a vision in the annual report. I'm not saying that if there's if they're doing $2 million in sales, that in 5 years they've got in the annual report that they want to be doing $200 million in sales in 5 years. That would be extremely suspicious if I looked at that. But effectively, it's still a very hard question to answer, Jay. But they have, because why it's a hard question to answer is because there's a fine line between CEO being overconfident and a CEO being effectively a good amount of confidence. I would not want a CEO running one of my companies that's extremely promotional. And if someone comes out with a 10, 15-year target, I'm not going to look at it that well.
Hmm.
But if I know roughly, I'm not talking about revenue. I'm not trying to get revenue to the next decimal place. And I'm not saying like in 10, 15 years, I think the company is going to be producing $450 million in revenue. That's not what I want to know. But if I know roughly what the company is going to be doing in 10 years or 5 years, 5 years for me is like long term. Even a year now in the share market's decently long term. A lot of people don't look past a few months, so I'm looking at kind of 2 years out, and that's kind of how I get my extra bit of outperformance because I own the underlying security and I'm sitting there and I'm waiting, and we've explained that in previous
Yeah.
episodes. But yeah, effectively,
You
that's
gave me a thought. I wrote it down. I love the answer. And I wrote down they have to live in a way that's congruent with their vision because the people closer to them will buy into it or they won't relative to how they're living. So I thought they have to live in a way that's congruent with their vision, with their vision. Because on in your timeline, the people closest, those share employees, customers, vendors, that how you said, I love this. You said how they relate to the people, how management relates to the people, incentivize the people, and deliver the product or service. That relation piece, the relatedness, it, it's like how the CEO how congruent they are in how they live with, like we admire Warren and Charlie because of how they chose to live. They were the leaders of this movement, uh, uh, which is a part of a certain way to do business. Just what are your final thoughts on that?
Jay. I think I finally come up with an answer to your question, but people are going to laugh at me. But a you need the employees to be bought in. Like you don't need them to be in love with the CEO, but you need the employees to be bought in to have a good company, right? And I'm saying from from the bottom up, right? That's the one of the most important things in a business. It's the culture, right? If everyone sees the vision, sees the mission, it's probably a winning company. So it's probably less about it's not about the what's in the annual report and where they think they're going to be in 10 to 15 years. It's when you go down to the site or you speak to the employees on the lower
Hmm.
levels, what they're like and what the vibe is there. I'm not saying if they're excited, because some people are excited to come to work and some people aren't. But I'm saying if they have a good vibe and have a strong 5 year view on the business, like if you speak to them about it and they're reasonably upbeat on where they think the business is going, most employees will think their business is going all right. But yeah, if you can find the most skeptical person at the company and speak to them and see if they still think it's okay. A lot of people don't understand investing, but if you go speak to the employees, they also won't really understand investing, but they can give you a few good hints to the future of the company. And if they absolutely hate management, mate, the business is probably just leave it. Just leave the rock on the floor, don't flip it. If the employees hate management, like if you can find 2% that hate management, do not touch the stock. Um, Usually, there would probably be an exception to the circumstance. You'd probably find the original Warren Buffett business, which the management sacking the employees slowly and stripping the business for its cash and its assets. They're obviously going to hate the management team. But if it's a business that's growing, as long as the employees don't hate it, it might be going somewhere. Obviously, you need to have done all of your homework as well on where you think the business is going. If you like the product, if you think the product has a place in the world going forward. I'm not saying you just go in blind completely and you go to an investor day or you sit outside a warehouse and you just go, hey, do you like working here, mate? And then you go buy the share. It's not as simple as that. But yeah, it comes back to the company culture, which is weird because it's the name of the podcast. But yeah, with that, I think we need to start wrapping it up.
If you're listening to this episode, go read some books. Please share this with a friend. Leave us a review on the Culture Matters podcast. Follow Aleck Arena. Go listen to our other episodes starting at 221. Some of the interviews, Steve Baxter, Luke Winchester, Chris Davis, Jordan Svetanovsky, and many more to come. And we will see you next time on the Culture Matters
And
podcast. Thank you, Aleck.
thanks, Jay. And for investors out there, go do some unofficial side tours and go do some digging up. Go speak to people that buy the products and go see how they have what their relationship is like with the business. If they think the business is going to still be around in 5 years, why are they buying from that business? Why are they not buying from a different business? Thank you so much for your time today, Jay. Always awesome being on, mate.